Hello everyone and welcome back to the China EV show. I'm your host Toby as always, and today we're going to be diving into the sudden downfall of WM Motors and what it means for the Chinese EV industry. But before we get started, don't forget to give us a like and a subscribe. It helps the channel a lot. Now let's get into it. The EV industry in China is not all sunshine and rainbows. And if you want to survive, you have to bring something to consumers that is really outstanding. There are big winners and big losers. And the latest of these losers is WM Motor, or Weltmeister, an 8-year-old EV startup that has officially filed for bankruptcy. I know what you're thinking, what's the big deal? Companies go bankrupt all the time. Well, WM Motor was once seen as a company with great potential, a would-be rival to Tesla along with other Chinese newcomers like NIO, Li Auto and XPeng. This move sends a powerful message about the fierce competition in the world's largest EV market, that no one is safe. WM Motor, founded in 2015, previously raised around 40 billion yuan from investors including tech giants like Baidu and Tencent. It showed some promise, with its peak sales year in 2021 reaching almost 45,000 vehicles. Not a large number by China EV standards, but still not bad for a startup. However, in 2022, when the EV industry in China experienced a 93% growth, WM Motor suffered a drop of 1/3 in sales and began to face financial difficulties, leading to salary cuts and showroom closures. The company has blamed its troubles on a combination of factors, including the pandemic's impact, a sluggish capital market, unstable raw material prices, and challenges in securing the necessary funding for operations and further development. Don't forget a price war that was started by Tesla earlier this year, forcing all EV brands to slash their prices and adding more pressure to these smaller EV brands. So what does this mean for other EV brands who are struggling to survive? WM's bankruptcy is a wake-up call to other EV startups in the industry. No matter how big you think you are, your fortunes can change quickly, especially for those without deep pockets. If you are not big enough or don't have the backing of some serious players, it may be the end of the road. At least 15 once promising EV startups with a combined annual capacity of 10 million cars have already folded, leaving the bigger brands to take the lion's share and smaller contenders to fight for scraps. It is only a matter of time before these brands get crowded out. XPeng, CEO of XPeng Motors, predicted that by 2027, only 8 of the biggest EV makers would remain. So if we take these 8, who do you think will survive? BYD, for sure. XPeng now has the backing of Volkswagen. While NIO continues to lose money, it also continues to receive financial support. Hi-Fi also has wealthy backers. Zeekr, while considering itself a startup, does have the backing of Geely behind it, so I'm sure it will be fine. And Ito, Huawei's brand, has also received some recent success. Who else makes the list? Let us know in the comments below. Last month, as a final lifeline for WM Motor, a $2 billion merger deal with Apollo Smart Mobility fell apart and a subsequent bailout attempt also collapsed. While we continue to see brands bite the dust, the China EV market is still crowded with around 200 players, from traditional automakers transitioning to electric vehicles to tech giants like Huawei and Xiaomi entering the scene. Traditional automakers, while off to a slow start, have realized their shortcomings and sought the help of some of the bigger EV players in China. This is a trend we can expect to see more of. At the same time, tech companies like Xiaomi and Huawei have incredible strengths in user experience and emerging tech and are able to provide competitive offerings. We have seen this recently with the continued success of Huawei's Ito brand, which has received more than 60,000 orders in the month since the M7 hit the market. But with more mergers and companies disappearing, it is clear that the competition in this market is intense. So who will remain victorious? In this market, companies need deep pockets, big backers, operational excellence, and a winning product if they are to survive. Those that can't adapt quickly, like WM Motor, are headed for the graveyard. So who do you think's next to go, and who do you think is a sure thing? Make sure you let us know in the comments below. As always, if you enjoyed the video, make sure you give us a like and a subscribe for more updates from the China EV scene. I've been Toby, and I'll see you next time on the China EV show.